All right, welcome everyone to SONAR 301 training. My name is Henry Byers, a maritime expert here at FreightWaves, and I'm going to be leading you through some of our maritime data sets, showing you what we have in there currently, and then we'll round the conversation out with a bit about what's happening for SONAR 5.0 and what we plan to release here at the event in Chicago in November. Very excited. I've been working on a lot of different data sets. I think everyone will be very pleased both with what we currently have and the direction we're headed and where we'll be in a month. So let's go ahead and get started. So I guess if it's 301 training, we already know mostly how to navigate Sonar, how to add pages, things like that. But I haven't pre-built any dashboards, but certainly if you want to follow up and shoot me an email or anything like that, I can certainly build a dashboard for you real quick and send that to you in a link. But we'll just start from scratch here. So I'm going to exit out right here from where I'm presenting, and I'm going to go into Sonar. So I'm on the global pages now. I'm going to go down here and just edit pages. I'm going to do add page, and I'm just going to name this test maritime. So I think we'll start with the maps because I think it's a good place to kind of get a top down view. So I want to show you kind of what we have on our maps that I think will be useful in the maritime space. Number one, we started obviously in truckload. So the Sonar 5.0 maps for maritime specifically will be much more robust. But I wanted to kind of show you how we have some of these different data sets broken out. Specifically, these are our 135 different truck markets, the way we've segmented these for our truckload data specifically. And as you'll see, a place like Los Angeles for what we call an X market. So out of these 135 markets, Los Angeles, LAX has two ports there, Long Beach and Los Angeles. Both are very important, to that X market. So the data that we have for like customs import shipments, you'll see, it'll be cstm.lax. And it's important to note that that's for that market specifically. So cstm.lax has both Long Beach and Los Angeles's data in there. And we did that because we're trying to show the correlations between, import shipments coming into the United States and how that plays out in the trucking market. But one thing specifically, if you can turn off that granularity data and turn on the intermodal maps, we're going to click on this train, and I'm just going to click on for the rail data. I think this is really helpful to understand how freight moves inland in maritime. So, obviously, if you're hitting the port of Los Angeles or Long Beach and you're in Chicago and you've contracted with the ocean line, basically, to get that shipment to Chicago, then it's going to load the rail there in Los Angeles and Long Beach. So you see you have two major rail lines, BNSF and the UP. And you can, of course, do where you select none, and you can just turn those two on and get an idea of, different ocean carriers, how they're contracting with the rails, which rails are they actually using, and how it's being routed through the country, to get to places like Chicago, Memphis, Kansas City, Dallas, places really west of the Mississippi. And then you can obviously turn those off, and you can light up the CSX and Norfolk Southern, and you get an idea of how those are transporting that freight inland. We've seen some real interesting statistics in the intermodal rail data, the containerized intermodal rail data we're capturing, about the shifts from West Coast to East Coast, and it just kind of helps to visualize it this way, and see really how it's moving. It's just the rail lines, and it's basically just mapped over top of each individual rail line, but I think it just helps to visualize. So let's click out of the map and let's just start up a chart. And this will be a good place for us to start about what maritime data that we do have currently. So if you just click your cursor into the inner symbol, you can actually scroll down, and you can pop open maritime here. And you see quickly that the FBX is now a legacy variable, and it's now turned to the FBXD. So the reason we did that, we had the Freightos Baltic Index and the Freightos Baltic Daily Index, and the Freightos Baltic Index was lagging. It comes out bi-weekly, so every 2 weeks we're getting that data, putting it in there. But the daily index is the daily value, so what ocean prices are for a 40-foot container on those trade lanes. So let's go straight into the Freightos Baltic Daily Index, and we'll look at, really only under national, we have the global. So we can actually start there and work our way into different trade lanes. But so this is going to be your average rate for a 40-foot container. So you may hear per FEU thrown out there sometimes, per 40-foot equivalent unit. That's the 40-foot version of the metric TEU. So per FEU, per 40-foot container, what is the US dollar amount that you would be paying on average throughout the entire world for an ocean move, a port-to-port ocean move? This is ocean port to ocean port prices, by the way. So if I click back into here, I can do some different derivatives of this, and I'll just keep clicking through here because this maritime doesn't have as many. It's actually pretty easy to search through. So we'll do Freightos Baltic Index. When you pop out these regional international trade lanes, this is where it gets to be. You may see, if you've watched the FreightWaves now, we're all the time talking about FBXD.CNAW and CNAE. And that's China to North America West Coast and China to North America East Coast. So I'm going to click on CNAW. So FBXD.CNAW if you're just typing it in. And let's go ahead and click compare. And we're going to type in FBXD.CNAE. So this is looking at China, North American West Coast versus the rate, the ocean rate for port to port move for a 40-foot container in US dollars, comparing West Coast to East Coast. So we'll populate this in there. And obviously you see the rate is higher. So if you're looking at that on a year, you see they move together. But there is quite a bit of difference between the rate to the West Coast and the rate to the East Coast. So if we put that in a dual axis here, and we look at it together, then you can kind of see, really the variance, like what we call the Panama spread. So we actually have to where these rates are, you basically take the rate to the East Coast and you subtract out the rate to the West Coast, and you get what we call the Panama spread. So in your routing decisions, you're thinking about that in terms of, okay, if East Coast rates go down relative to West Coast rates, then it may be a more attractive option for me to send that freight East Coast. Now, and that's why I would refer back to that intermodal map that I had up, is because you can clearly see when you're looking at those routings, does that make sense or does that not? Like if you're in Kansas City, it may not make as much sense to route East Coast because obviously you're going to have to go inland to a hub that's along the Mississippi, whether it be Chicago or Memphis, and you're going to basically have to switch rail lines, and there could be some delays there, and also the cost associated with that. But I think it is an interesting way to look at it. So if you type in FBXD.P, hold on one second, PANA, this is what that represents. So you see it's the China North America East minus China North America West. That's the spread. And you can look at that, as far back as we have it. We have data on this back to 2017. But let's look at some others as well. So one big, since we know that the Freightos Baltic Daily Index represents pricing for a 40-foot container, you can get a feel for, this is Europe to North America East Coast. So you're looking at the first region, continent that's labeled, country that's labeled, is where the origin ports would be on that port-to-port move. So you can clearly see, China to North Europe, you're looking at places like Shanghai to, you're going to look at Rotterdam, Antwerp, your places in North Europe. That's the general benchmark for that specific trade lane. And then if you had something that's Europe, North America East, that's going to be something like, Rotterdam, Antwerp, and it's going to be going to New York, Savannah, and that's how you benchmark those rates. But I wanted to bring up one thing, and that is that you see this goes back to 2017 for the Freightos Baltic Daily Index. So there's not as much history here, and I think this is why this is helpful to now move into another rate benchmarking index that we have, and that's the Drurys. So Drurys is a maritime research organization. They do a lot of research around the containerized, maritime containerized freight and what the industry is doing at any given moment. So we go to the Drury World Container Index. It's representing the same thing as the Baltic Daily Index, but the way those rates are gathered is a bit different. So the Freightos Baltic Daily Index, that pricing is the pricing that's actually going through the Freightos marketplace. So it's actually, they also have a rate management system called Accelerate, where they're processing all these rates and what the transactions are on a daily basis, and they're giving you the average of that price for that day. So you see the daily index has a lot of volatility, at times, because it clearly shows what happens on that marketplace. So in an instance like Golden Week, where West Coast rates may plummet, as carriers get more competitive, trying to reduce their rates and get many shipments as they can prior to that holiday. You can see that represented in that. The World Container Index is really nice because it has the history of things like the port strikes in LA, and how that affected rates, which led to the Hanjin bankruptcy, 2016. I think that's a really important thing to look at. So what I'm going to do here is I'm going to pull up WCI dot SHA-LAX. So whereas we have the general regions, the countries, in the Freightos Baltic Daily, so in this case, China to North America West Coast, this is the benchmark concept for the rates is the same. So like this Shanghai to Los Angeles is a specific port pairing. So originating in Shanghai, delivering in Los Angeles, on that port-to-port routing. It's a little more specific. So this is looking at that actual lane. But these lanes represent, the lanes that are really the benchmarks for the industry. So really, they have the most volume. So Shanghai to Los Angeles, up until recently, has moved more volume than any other lane. So right now you can see on the Drewry World Container Index from Shanghai to Los Angeles, if you have a shipment originating in Shanghai, terminating in Los Angeles, for the ocean freight for that, you're going to be paying about $13.93 for a 40-foot container. So just like truckload, if the weight, if it's a really crazy weight, it's overweight, it could be, if it's hazmat, you may have some additional surcharges, but this is the average, FAK, so freight all kinds, which is how the ocean line's looking at it. So that encompasses a lot of different, commodities in what's called the spot market for ocean freight. So the FAK market is essentially the spot market for this ocean container freight. So if we look at now, just like we have with the Baltic Index, you pull up China to North America West Coast. Let's pull up China to North America East Coast, which for the Drewry World Container Index is going to be WCI.SHA for Shanghai. And now you see down in there NYC. So we're looking at the rate from Shanghai to Los Angeles versus the rate from Shanghai to New York for a 40-foot container. I'll turn on the large fonts just so everybody can clearly see. And what we have here, if we pull out a year, you see a very, very similar. These move in tandem lots of times. You will see some things. You can kind of see where the Panama Canal had a draft restriction that had a upward pressure on East Coast rates. Things like that. So if you do all those, this is why I wanted to bring this up, because this is really powerful. Let's put this back in absolute so you can get an idea of what this Panama spread looks like. So if we go back to the port strikes in LA in early 2015, late 2014, we can clearly see that the East Coast rates jumped way up. This also happened in conjunction when the Panama Canal basically opened up soon after that. So you had a lot of freight that didn't go through the West Coast because basically a lot of U.S. importers, due to the strikes, had to either reorder product because that product had now gone bad, or just were basically saying we cannot afford to move freight through the West Coast specifically. I mean, obviously Los Angeles and Long Beach, but we need to send this East Coast because we can't risk any further, obstructions, any further congestion as a result of these port labor disputes. So you actually see that what we would call the Panama spread in this case. So the difference between Shanghai and Los Angeles and Shanghai and New York was actually the largest at the same time period in recorded history. That spread got to the widest that it's been, like I say, in recorded history. So you can really get an idea of what's happening, East Coast versus West Coast volumes. We're seeing a very similar thing happen here where East Coast is, accelerating a bit past West Coast. They're not necessarily moving directly in tandem in the same proportion recently because you've had the trade war play out. So you see a lot of this freight moving to the East Coast, which really brings us to my next point, which would be to go through some of the volume statistics that we have. So outside of the pricing, for the juries specifically, we have like the 2-week change, we have the monthly change. So if you're trying to get an idea of what the month over month percentage changes and things like that are, you can obviously look at that. But one of my favorite data sets by far is going to be our US Customs maritime import shipments. So what this is, just like I'm talking about these volumes switching, some of them at least, volumes moving towards the East Coast, Gulf Coast. This is reflected in what we're measuring. So we're actually measuring and tracking the bills of lading that are coming into the country. So for all of the bills of lading, which would represent a financial transaction between a shipper and a consignee, really per bill of lading, meaning one shipment. So all these shipments and where they're coming into. And again, we have these pinged to our X market, so our trucking market. So cstm.lax, and we'll just pull it up here, is actually going to be pulling up, all the import shipments that went through both Long Beach and Los Angeles. So this is a moving 7-day average of the import maritime shipments. If you didn't have the moving 7-day average, it's very, very noisy. So we do that just to give it a bit of smoothing out. But you can clearly see if you type in cstm.sav and we throw it in a dual to get a better representation of it, you can clearly see Savannah has been picking up some major volumes. This has been happening for a while, but you can back this all the way out, and you can see that it's been growing quite a bit. And you can see this clearer in things like the monthly variation of this. So if we look up MCSTM, that's going to be our monthly. So we'll pull up the same statistic in monthly. So we're going to pull up LAX versus SAV. So we're going to look at the volumes coming into Savannah versus the volumes coming into Los Angeles. And if we look at this, pull this out, you can see right here, Savannah is really taking in a lot of volume right now. A lot of the trade war pushing manufacturers outside of China is now making the Suez Canal a more attractive option because basically Vietnam, places like that, don't have the port infrastructure to support the amount of volume that is now, manufacturers are looking to start pushing through those ports. So they really have to catch what's called a feeder vessel to places like Singapore, where they can then load those big mega vessels that can then call the East Coast ports. So for that very reason, it's becoming a more efficient option to move through the Suez Canal, and a lot of those routings terminate on the East Coast. So East Coast is, there's a bit of a paradigm shift here as a result of the trade war. What probably was already happening on a much smaller scale, your biggest importers, people like Nike kind of had already moved out of China a bit. It's happening in a much quicker fashion now. So that's been sped up quite a bit. So if we look at one of my favorite things to look at when we're looking at these is just to compare basically, a lot of these different shipments and basically like who's picking up market share in any of these ports particularly versus the others. So if we go into maritime and we want to see, specifically which ports, represent a majority of the U.S. imports for the entire country, we can go down into here and look at import market share. So this is out of the total number of customs imports that the U.S. receives. So customs counted U.S. imports, what percentage is going through each port. So, and we actually have the UN low code. So some of you guys may or may not be as familiar about what those are. This is how the UN references each location that's been, basically agreed upon. Will be a location that's marked by the UN, and it's allocated a 5-digit code. Those are normally letters, but they can include numbers. In the case of the U.S., whenever it's like US NYC, that's going to cover the port of New York, New Jersey. And basically it's denoted by that, and there's a number that's associated back in the back end, but normally you would just see US NYC represented that way. So we've done it the same way here. We're trying to be consistent as we build this out with our sailing schedules and vessel tracking and things like that. But right now we'll look at, you can basically look at Long Beach. So we'll type in PIMS.US LGB, and we'll type in PIMS US LAX, and let's type in PIMS US SAB, and we'll type in PIMS US NYC. So we're going to look at, two of the major East Coast gateways versus, those two SoCal gateways into the country. We can actually look at, Seattle, Tacoma as well. So we can do PIMS, didn't include the US, SCA. So if we put this on a dual, we already have it on there. If we back it out, you can really get an idea of how these are growing relative to one another. So you see LAX is, actually, let's take that in absolute so we can get a, let me refresh this. Okay, so now that's a much better way to look at it. So you can see down here, Savannah picking up to capture 1% of U.S. imports. So you're having to capture, millions more TEUs. So it's quite hard to increase in market share for some of these smaller ports. But you see clearly Savannah's on an upward trend, especially if we're looking at about a year. We can zoom in, look a little, but essentially you see those trends moving. LAX is picking up quite a bit of volume relative to Long Beach, and you see Long Beach is taking a downward trend here. Some of the different dates are a bit different because basically the way those customs transactions are counted, it has to capture that last month of data. So if you looked up MCSTM .LAX, for instance, you're going to see that it stops back here. But basically, we'll be coming out with the months as they roll in, as we're counting that data. I'll show you right here. You can actually see the date when you look at the daily. So you can see we've got all the way up to September 6th. So we, which that's a bit odd. I'll have to check that. But neither here nor there. That's a rolling 7-day average. And once we get that data into the system, it'll move up to the nearest date that we have. So beyond the customs transactions, beyond the rate benchmarking, the last thing that we're capturing is actually the official port statistics. So this is quite interesting to look at as well. So we've also broken Long Beach out of here. So this is officially what's reported by the port authorities. You can go to their websites, look at it. It's exactly what they've reported. So we're subject to when they actually report that, but we actually have it set up where the moment they put it in there, we have it within SONAR. So you can trust that, that we have it updated through the latest date that they've provided online. So we look at loaded TEUs import, and that's IMPTEU.USLAX. And we look at IMPTEU.USSAB. So we're just, again, comparing Savannah to Los Angeles, and we'll put that in a dual. So you can see in August, I was actually tracking those customs imports. And that's one thing to realize is that we're getting that updated, in as near real time as we can. That's really available right now. It's the time that customs processes that data, and gets it to us. So, it's really a leading indicator. If you see, like in early August, I was seeing that Savannah was going to have their best month ever for loaded import TEUs, and I was tracking that, and they did. So I was able to see that about halfway through the month. So, these trends, when you're counting import shipments, if you're interested in where the volumes, in the truckload market specifically, we're seeing a lot of volumes start to gravitate closer to the ports. specifically East Coast ports in e-commerce, the trade war. There's a number of factors, land incentives for these places to put, new distribution centers, things like that. There's a number of different factors, but the reality is it's in the customs data. You can really track that. You can track those trends in the truckload market, track those trends in the ports, port throughput, things like that, by looking at those customs transactions. We will have a lot more of those for SONAR 5.0. We will break it down by commodities. We'll break it down by port to port. We'll break it down from containerized to non-containerized. We'll break it down by sector. So you'll be able to see what's the retail sector done relative to all the other segments of the U.S. economy for U.S. imports. So I would be expecting to see that build out in a really big way. But we also have export TEUs. So right when you see IMP TEU, if you look at EXP TEU, you'll see the export statistics. So these are loaded exports for Los Angeles. If you look at XPTEU .USSAV, you're going to see the loaded TEUs exported out of Savannah as well. So we have the totals as well for the TEU data. So we have loaded imports, loaded exports, total volume, so total loaded imports and exports for that specific port. And then we also have the spread. So you take the imports, because obviously the U.S. imports more than it exports, so that's always going to be the greater value, at least for the next 10 years, I would imagine. It's the number of imports minus the number of exports that were loaded through those ports. So there you can keep a track of how are U.S. exports performing relative to imports. Is that trade deficit growing or is it shrinking? Which ports specifically? What's happening with the trade deficit in a specific port? The trade war has had a massive effect on loaded export volumes. It's affected loaded import volumes, but U.S. exporters have been hurt in a big way. We have a lot of agriculture comes out of this country. There's obviously a lot of oil, gas products, but there's a lot of chemicals as well. But ag is, for the last 5 to 10 years has been a big segment of those exports. So you can see clearly there's drops in volumes. China was a big buyer of those goods. So you can really keep a good track of, how the U.S. export economy is doing, relative to the segments that import a lot of their products that they sell. So really beyond that, what I'll end with is some things to expect for the maritime. So we at FreightWaves understand the importance of connecting all the dots and how those can affect your business, particularly in enabling you to see all that. So for maritime specifically, what we're looking to do, and I won't, without going into too much detail, is I think a lot of you that are familiar with maritime and how it works, you're not getting great information about trade lanes, about port to port. And when I say that, I'm talking about capacities. What are inbound and outbound potential TEU capacities? How much space is available on those ships at any given time? Enabling you, giving you data that enabling you to make smarter decisions about your ocean routings, about your customers' ocean routings, being able to figure out, am I going to be able to get space on this vessel or this vessel, and take a lot of that guesswork out of the equation. So we're going to enable you to see, we'll be tracking all of the world's vessels and the cargo vessels that you're affiliated with. You'll be able to see the history of where they've been, where they're going, who they're affiliated with, what market share goes to each carrier. And beyond that, we're basically, demand is kind of the missing equation for a lot of maritime analytics. So we have customs data that we can use, we can leverage for a vast majority of the freight that affects the U.S. But what about foreign to foreign? What's it look like if you're a multinational shipper who is moving freight from Rotterdam to Shanghai? We'll be able to provide you data around that specifically. We'll be able to, and it won't just be rate benchmarks. It'll be, again, capacities, trade lanes, services. routings, vessels. You'll be able to see all the deep analytics into that. Obviously, that's all affected by the weather. So our weather maps will also be integrated. So you'll be able to see that those alerts, really in a predictive way, in a forecasted way, based on whatever's happening that we see should be something to watch for as far as origin or destination port volatility. And beyond that, I won't go into too much more detail, but I would say for those of you who have not signed up for the FreightWaves live event in Chicago, we will be debuting it there. I couldn't be more excited about it. The data science team has been doing an insanely awesome job. And I think everyone will be blown away by what we present up there in Chicago in November. So that's it for me today. If you have any questions, you can reach out to me. It's hbyers@freightwaves.com. That's HB as in boy, YERS @freightwaves.com, hbyers@freightwaves.com. And if you reach out to anyone else, they can point you in my direction, or you can find me on LinkedIn. I'm happy to help, happy to build dashboards, give you deeper insight into what exactly the plan is for what we have in maritime. But very excited. We understand what we have now is very limited, but where we're headed is huge. So I would be on the lookout. But thanks everyone. Hope you have a great day, great rest of the week, and talk to you soon.